Good morning, traders. Welcome to the market forecast. Today is Thursday, March the 18th. I'm John Hoagland. Thanks as always for trusting me with your time. As always, we're looking at these markets in consistent context through the lens of risk management. It's Thursday. It's been a very busy, interesting, and challenging week, as they all seem to be. Hopefully, if you were at group coaching yesterday, you found it helpful and useful. And if you attended the webinar yesterday afternoon that Dan and I presented, again, hopefully, useful and helpful information for you. As we start the day today, we've had some economic numbers already due out this morning in the form of jobless claims. And the Philly Fed jobless claims were a little disappointing, a little bit higher than they were expecting, but the Philly Fed came out much better than expected. So some conflicting information this morning. We are still waiting for the leading indicators, as we used to call them on the floor, the misleading indicators that are due out at 9 o'clock Central. And then, of course, 9:30 Central, we have the nat gas numbers due out. Don't forget, it is quadruple witching tomorrow. Equities, futures, options, stock options, and single stock options all expire tomorrow. It could be an interesting trading day. It's very difficult to gauge how that's going to affect the markets, how much it's going to, or if at all. But we just want to make sure and keep an eye on it. As far as other news is concerned, crude traders should be trading the May contract today. The volume moved over greatly yesterday. We've changed our charts over. There's only a 3-cent premium from in May from the April contract, so we're not changing any levels. Levels are more zones anyway. So, but we've got the charts on May this morning, and yes, you should be trading May crude. Bonds and notes have been selling off as price is concerned, as yields continue to rise. The U.S. stocks are lower as higher yields are attracting investors. Tech slides even lower. The Nasdaq suffering probably the most this morning. As always, we're going to have to see how this day works out. Crude prices to continue to drag along that weekly kickoff low after another surprise boost in inventories and some questionable thoughts about demand came out yesterday. Looking at the VIX up about 4.5% this morning. 2010 last time I looked. The dollar index up also 91.76, and the yield for the 10-year creeped up above 1.75 earlier this last night. Last I checked, trading 1.746%. As always, make sure you like, share, comment, question, and feedback. It's always appreciated. Got to say good morning to everyone. The infamous Felix Escobar, first in the room. You win the prize. Again, Felix. Brian D., Murph, good morning. Rob T., Bill, level 2. Will, Caesar, Troy, Michael Thomas, good morning. Level 2. Tell Dan I think you're saying thanks for the chat yesterday. You may get your chance to thank him yourself in Discord or on the recap, but I will make sure and tell him. Jason, buenos Thursday, everyone. Laura, Adam, Trading Research, good morning. My brother, another day in paradise. Yeah, it's not very paradise-like here in Chicago or up in Wisconsin where you are, Rick, but better days are coming. We'll be out on the boat soon. Looks like the markets have gone down last night as quickly as they went up yesterday afternoon. It certainly does. We're going to see a couple of things on the equities charts that are indicating that upward momentum, as we kind of talked about yesterday and the day before, may be starting to fall off a little bit. A little bit concerned that the S&P's left a new all-time high in the overnight session, but we'll take a look at that shortly. Good morning, Keith, Tim, Joseph, Mike. The chef is here. Andre. Good. Nice session yesterday. You're welcome. Angelina, Shady Trader. Let's make money today. Yes, maybe it's the day after St. Patrick's Day, but we're always up for the making of the green, right? Emma, greetings from London, across the pond. Nice to see you. Magnum, Big Toasty. What's up? Edward, good morning. Tactic, good morning. Oleg, Pipels, good to see you again. Murph, Paradise is waking up in the morning and getting out of bed without any help. Absolutely. Hey, my son, Luke is here. Good to see you. All right. Well, let's jump into the charts here as we usually do. We start. Let me get things set up a little bit here. We start with the daily and crude. Greetings from the kitchen. Yeah, he's actually sitting, I don't know, 20 feet away from me, sitting in the kitchen right now. So it's good to see you there, though. So let's take a look. What do I have to do here? Got to get this, and here we go. The daily in crude oil. All right, we've had a little change in heart here. It looks like this morning we've been holding above that weekly kickoff level, and it looks like we've got a little momentum, maybe heading to the downside here this morning. The 3 days of testing the weekly kickoff low seems to have we maybe have used up all of the buyers. We've exhausted the buyers at that level, it looks like, and we may be headed for some downside momentum here. We're still sort of holding this upside momentum. I'll be watching this moving average here for possible support as the price continues to move lower. Open interest has been blurred by the rollover. We had a drop of 35,000 in open interest, and much of that was due to the moving of the April to the May contract, and some of it all, just all of us just outright getting out of the market. We had an inside extended trading range that has now been changed. Let's take a look at the 30-minute chart here. It's probably looking a little bit like the opening range may be the high of the regular trading hours session. Felix, that is something we were talking about just yesterday, and it does seem that is true. We've got the opening range at the high of the session, moving below an important inflection level. There's some pretty good potential for this market to continue to move lower. Just off of this weekly kickoff level, we had a couple of decent opportunities as support. If we get the market to move back up to that level, it could be an interesting level of resistance. So I'm not going to be looking for any longs as long as that opening range remains the high of the session and we stay below this 63.80 level. I'll be looking to sell this market on pullbacks in areas that I can limit risk. It's going to be a challenging day if this market is going to continue to the downside. It's going to be a tough day to get into. Getting into trends that are already underway has always been a particular challenge for me. So just keep that in mind as you move on. Watching some high volume nodes or low volume nodes in the volume profile might be helpful in that regard. Boy, what an opportunity to catch a breakout below that important inflection level this morning. Murph, we need to call this morning recap. Yes, I do have a live studio audience. Nemo, how do you thicken the lines? Well, here, I'm just going to hold the cursor over where I can expand the time for the volume profile. I'm going to double click and it's going to bring up the volume profile properties. You can thicken the lines right here. You can change the colors and you can thicken them here. Okay? Whoops, don't want to remove. So that's how you can thicken up those lines. You can do that pretty much on any line or many of the tools on the TS Trader platform. Well, let's take a look now into the E-mini S&Ps. Okay, we've been kind of talking about how the upside momentum has been kind of falling off here. And one of the ways that I look at that is these moving averages here. These are Hull moving averages. It's a 9 in the red and a 13 in the blue. When there's a crossover or one or both start to head in the opposite direction after a directional move, that tells me, okay, I'm on alert now. There may be a change in the momentum. The upside auction may be getting a little old, getting a little tired, and we may be looking for an opportunity back to the downside. Now, I'm not a stochastic or RSI kind of guy, but if I suspect there may be a divergence, in other words, we've put in higher prices with lower stochastics, that's a divergence to me. So That's another thing that's saying that our upside momentum is falling off, and I may need to start to look to sell the S&Ps on strength. I know it's so hard to say and so hard to do because of the resilience of these markets. So, we added 1,600 in open interest on the day yesterday on a new high. We've put in a new all night a new all time high in the overnight session last night, which tells me the market doesn't like to leave it there. So that's going to take some of the confidence to sell strength away from that. There's going to be a lot of cognitive dissonance in the S&Ps, at least for me today, and I think probably for a lot of other traders. Now, remember, expiration is tomorrow. There's a lot of adjusting of inventories going on here. So that's, I think, where a lot of this cognitive dissonance is coming from. Overall, I think we're seeing a fall in the upside momentum, at least temporarily. The higher yields are now attracting investors, away from some of the earnings potential of stocks. So we're in a kind of a spot here. It's going to be an interesting trading day. Let's take a look at the 30 and see if we're seeing anything that might be interesting for us this morning early in the session. Here's our all-time high in the overnight session last night. I'm just going to leave that up there to remind me that we do have an all-time high in the overnight session. The market does not necessarily like that. It doesn't like that. It seems like the regular trading hour traders have an ego, and they like to make sure that any extremes are taken care of in the overnight session. We've seen several opportunities for the market the highs to be left in the overnight, and every one of them has been taken out. Is this going to be the one that's going to change that? I don't know. Overnight inventory is overall short. We have the 39.6350 is the settlement level. We've got a potential for kind of a repair day. We've got a high volume node up here. We've got point of control down here, which is also a high volume node, and very little activity or time spent in this area here. So if we open in that, I'll look for some possible repair. If we continue to push lower and we open below point of control, even below value low or the range yesterday, I think that, if we do manage to open with a gap, it might be an interesting opportunity as well. I'm not going to try and push anything. I'm going to wait until something reaches out to me and says, here's your spot. You're looking for trades, you're going to find them. And with quadruple witching hour tomorrow, I'm very cautious about trying to get too aggressive in these equities. And it may cost me, but that's okay. There's always another opportunity. Tomorrow's always another day. It's one of the things we say quite often here at Top Step is always trade for tomorrow. We got to be here tomorrow. So, we just did that. I'm going to go to the Nasdaq, which is been saying this for a while, is same but different, and it's really kind of hit the skids here this morning. All-time high in the S&Ps was last night. February 16th was the all-time high in the Nasdaq. Nasdaq has been presenting as a weaker market. We've had a couple of tests of weekly kickoff high 3 days in a row. We did close above it yesterday. Settlement was 13,189. You can put that on your charts. We'll look at the 30-minute here shortly. But we weren't able to maintain that. It was an emotional move up there. We looked higher. We're going to be opening considerably below that weekly kickoff level, and that's going to mark a pretty serious level of rejection at that weekly kickoff high, 13,170. Yesterday's extremes, the overnight high and the overnight low, look interesting. The weekly kickoff is going to be pivotal if given the opportunity to take another trade there. 30-minute chart here. There's settlement. Okay, well, just above that that weekly kickoff high level. The emotional move to the upside after the Fed meeting yesterday, actually closing above this level, finding support there a couple of times in the overnight, and then finally just getting crushed to the downside. Again, I'll be watching to see if we can open with a gap. It looks like we're going to be opening below point of control here, so that may reduce the opportunity of a repair day that could take price back up above weekly kickoff high to this high volume node here. Lots of overnight shorts. We added 10,000 in open interest on this move yesterday. I find that to be very interesting. If we were to take a look at the direction yesterday, we would think that those would be new longs coming into this market. And if that is true, those new longs are sitting in a little bit of pain here. And the market always goes to the point of greatest aggravation, as one of my old bosses used to say. Let's take a look now at gold. Pretty interesting opportunity in gold late yesterday and in the overnight session today. Weekly kickoff high, 1748 even. We had a peak above it yesterday before the extended trading hour close. We had a peak above it last night. Unable to maintain price above that level. We've got a decent move to the downside here. And most of that, again, in the overnight session. So it still is acting as though we're in short time frame control. We're between weekly kickoff high and weekly kickoff low. We've been traveling through this area for quite a while. We did have 3,700 in open interest on that push to the upside yesterday. Again, did we trap some longs up there? It's really starting to feel that way, isn't it? Take a look at the 30-minute chart. Okay, so the settlement price is all the way down here at 1727.10. The market settled yesterday before the FOMC meeting came out, and as well as before Chairman Powell's press conference. So all of this happened technically after the regular trading hour session in gold. That's why we have this settlement down here. You would think settlement would be closer up here near weekly kickoff high. We took a look. We took another look last night, unable to maintain control up there. It looks like we've put kind of a head and shoulders up here overnight, right? Well, if we were long here, we got out of those longs here. I'm looking at this market as a potential continuation to the downside. It's a pretty stiff rejection of weekly kickoff high. Yeah. And, where are we looking kind of below for potential profits or potential targets? Well, we're getting pretty close to this naked point of control right here, which is, let's see what happens here. Let's call it 1718 even. We're within about 5 ticks of it so far. That's an interesting area to look to lighten up a little bit if you're thinking about it. We've got to go pretty far back to find anything else other than this low right here around 1700. So we've got our work cut out for us. Again, I think it's going to be a challenging trading day, as if they aren't all challenging trading days. And I'm looking forward to kind of getting the markets back to an organization. No rollovers, no triple witchings. I'm looking forward to seeing that next week. And I'm going to be here next week to see it, because I am not going to put myself outside any of my risk appetites. I'm always going to be looking for the cheap trades, and I'm going to wait until they present themselves. Here's the euro. Okay, well, kind of similar to gold still. Balance remains. You see it. We're starting to form a little bit of a rising triangle formation. If we were to put a trend line across here and across here, we've got some pretty even highs along here and higher lows along here. Eventually that may be something that we're going to be able to use, but I'm still looking at this market as a market that is in short time frame control, open interest, It says on the sheet, if you're watching that, it says we lost 163,000 in open interest. Well, that's the expiration from March. Okay, all of those contracts are settling in cash. In the June contract, we added 3,700. So again, similar to gold, it appears as though we may have trapped some new kind of late to the party longs along this trend line up here yesterday, and they're currently getting hurt. What does it look like on the 30-minute chart? Settlement all the way up here, 1,2000.5 ticks. Right there. Big move to the upside, settling up there. We see the market continuing to push lower. We've got a whole lot of shorts in this market, a whole lot of shorts. Maybe we got those longs to get out and end up getting short here. Our current low, the point of control from yesterday. Interesting. Is this kind of a target-rich area down here? I would say it is. We've got value low, the low of the range from yesterday. We've got value low from the previous day here. Lots of activity here. Is this a demand zone now? Is this a demand zone? It might be an interesting spot, if only because we can limit our risk. If we do hold the point of control here, an obvious target is going to be high of value because there's a high volume node there. We've opened between two high volume nodes on a directional day. Those days sometimes will turn into days of repair. The market is going to kind of hang around in here and see if there's anything left to do as far as business is in the regular trading hour session. So kind of an interesting spot down here at the low in the euro. It's not that high on my radar today, but I'm finding this to be kind of an interesting area. And to the 10-year. So as rates continue to rise, all of those 10 years that are providing smaller interest rates are getting cheaper and cheaper. And we see that in price here. The downside structure of this move is really kind of holding very strong. 1, 2, 3, 4 touch points, getting close to it for the past couple of days. We were looking at this area right here, this 131.23 area, as a lot of lows there, kind of an interesting opportunity. If we get the opportunity to see that as resistance, it might be something that's going to be useful for us. And again, I don't really want to step in front of this move to the downside. We keep seeing rates continuing to move higher. Take a look at the 30-minute chart here. Okay, so knee-jerk to the upside yesterday, settling very high. We've got a whole lot of shorts in this market, and we did open with a gap. So if we can't close the gap, we're going to be looking for opportunities to continue to see this market moving lower. If we start to think that we're getting a little bit too short in short time frame and we're not getting help from the longer time frame traders, maybe an opportunity for us to catch a move in the opposite direction. Now, with the structure as strong as it is to the downside in the longer time frame, I'm going to be cautious to look for any moves in the opposite direction. And if I do find one, I'm going to keep the profit target very reasonable and probable. I'm not going to fall in love. I don't think I'm going to buy the all-time low here. I'm going to be looking at a move that might just move us in the opposite direction. But again, if I fall in love with it, with the market and the state it's in, it may be a short-termed profit that could turn around on me. Anytime I'm going contrary to the bigger picture, I have a pretty specific profit target chosen. Nice profit target. How about point of control or this level right here? It's not a weekly kickoff level, but it's a level that has presented itself as important in this week. So it would be a nice level for us to think about taking that profit if we do end up putting in a low here. I'm going to be looking for some sort of structure if that's going to happen. Not seeing it now. All right? Okay. Thursday. We've got a lot going on. It's going to be opportunities. Going to be an interesting, fun, challenging week, of course. We're rounding the final furlong here. We're rounding the far turn, if you will. Let's get out there and have a good trading day. Let's get out there and profit. Looking forward to seeing Dan on the market recap today. I'm going to be interested to see how these days played out for everybody. Let us know if you had a good day, if you had a rough day. Well, that's kind of part of the game. But the point is, make sure you're here to play again tomorrow. Right, we've got about 4 minutes before the equity open. I'm going to take my deep breath. Stay humble, grateful, and creative. Be patient today, always, and get out there and profit. Have a great trading day. Trade well, and we'll see you later on.